Hi, everyone. Welcome
Hello.
to episode 4 of What's Up With That, Alex? This is a chance. Well, I'm Simon Kent, partner of Connect Family Law, and with me is...
Alex Boland. I'm your local Kelowna family law lawyer.
Yes, he is. And in fact, we are here in Kelowna today to shoot a few more episodes of What's Up With That, Alex. And it gives me a chance to ask Alex questions about separation and divorce, questions that might have come up for me or still are coming up for me, or questions that I might have heard through friends or family.
And then I do my best to answer them within the bounds of my limited knowledge and all that sort of thing.
Correct. Yes. So please do not rely on this information. This is for entertainment purposes only.
We'll call it edutainment.
Oh, I like that. Okay, well, you ready to get started?
I'm absolutely ready.
Okay, so my question is this. I've got a friend who runs a company, and he was told recently that in order to calculate how much he has to pay for child support, he will not just be able to rely on the number that's on his income tax statement. In fact, there are other complexities around that. Now, what's up with that, Alex?
Yeah, that's a really good question, and one that comes up really often, basically anytime anyone is employed through a business that they control. And there's kind of two overarching scenarios. The first scenario applies really only to people that are employed through a corporation that they control. What the federal child support guidelines say is that in that scenario, a person's income would normally include all of the pre-tax corporate income of the company. So in other words, you look at the revenues, deduct all the business expenses, and whatever is left over as profits, that can be added to the business owner's income for the purposes of child support. Basically, the court is saying, if you wanted to, you could pay yourself the profits of the company. The court usually will start with that approach. So anyone who is employed through a corporation needs to take that into account. So that's scenario one. Okay. Scenario two applies not only where there's sort of a corporation involved, but where a person is self-employed, sometimes through a sole proprietorship, that kind of thing. And it has to do with business deductions, which every self-employed person loves because they allow you to reduce your income for the purposes of income tax. So common ones would be people will write off a portion of their car, write off a portion of their rental income if they have a home, or rental expenses if they have a home office, cell phone, some meals and expenses. All of these are frequently written off, and quite properly so for income tax purposes.
I do that.
Yeah, most people do. I certainly do as well. And there's nothing wrong with it. It's appropriate to do that. But what the court says is that just because an expense is properly deductible for income tax purposes doesn't mean it's properly deductible for child support purposes. So you'd often see the court adding back some of those expenses to a person's income. Court is basically saying, although that's an appropriate income tax deduction, it's still an expense you would have had otherwise. It's still covering a personal expense for you. And so for child support purposes, we're going to treat that back as income to you.
Okay. What about a scenario where, just using my buddy as an example, in his business he's about to expand and requires quite a bit of capital in order to have that expansion? Is he not allowed to say, look, we can't attribute every dollar that's in my corporation to my income for the purpose of child support. I need this $100,000 or $200,000 to expand, and therefore it should be excluded from that calculation?
Well, the answer to that, Simon, is that it depends.
It depends?
It depends.
What? There's no certainty in the
law?
law?
There's no certainty in this area.
Just shut the camera down.
No. But really, what the court would expect to see is some kind of concrete plan, some real clear reason as to why this money is being left in the company, often accompanied by some expert evidence to say that this is an appropriate amount of money for a company of this kind to retain. And it does depend on the kind of company. If you have a company that is just a holding company, all it does is hold some real estate. In that case, not much room to leave retained earnings in the company. If you have an operating business, it's a different story. But fundamentally, this is a difficult question to answer and often does require some expert evidence.
Right. Okay. Well, that was really interesting. Thank you very much.
I try.
Yeah, well, it was lovely to see you again for episode 4. And we invite any questions or comments that our viewers may have around this subject. It's a complex one, and we've certainly just touched the surface of it. All right, would you agree?
I would agree, and I would say if this is an issue that comes up for you, you should certainly seek real legal advice. Probably edutainment through a YouTube video is not going to cut it.
Okay, all right. But this is the first step.
First step.
Okay. So thanks, everybody, and we look forward to seeing you again next time.
See ya.
Bye.